If you trade futures, you've seen this exact move more times than you can count. Price pushes just past the high of a session, runs the stop sitting above it, then reverses hard the other way. The clean breakout turns into a trap. That sweep beyond a session's high or low, right before a reversal, is the behavior this tool was originally built to trade. It's called Quantum STS, the session trading system, and it's the newest tool in the Quantum Pro suite. It started as a session fakeout system and now bundles a second mechanical edge, the opening range breakout, alongside a set of discretionary tools for traders who'd rather read the chart and time entries themselves. Every part is a module with its own on-off switch, so you run what you use and hide the rest to keep the chart clean. And it ships as two tools, part of our wider Pro suite. Quantum STS is the live indicator. It draws the sessions, marks levels, prints the risk to reward boxes, runs the fully configurable opening range with advanced settings and the trend ribbon, and fires alerts in real time. The QSTS Backtester runs the same mechanical logic on historical bars, so you can measure how your offset, stop, and target settings have performed before you commit real capital. Let's go through all of it. First, the session fakeout. The market moves through sessions, and Quantum STS divides the day into Asia, London, and the New York session, which it splits into three windows: pre-open, AM, and PM. Most traders treat New York as one session. This breaks it into three tradable windows, each a setup in its own right, but every session can be shown or hidden independently. So if you only trade one window, or you'd rather treat New York as a single block, just hide the ones you don't care about and trade it the way you're used to. Each session has its own time zone, start and end time, and color. The sessions feed each other in a fixed cascade. When Asia closes, its high and low build the levels for London. When London closes, its range builds the levels for pre-open. Pre-open feeds the AM session, AM feeds the PM session, and PM feeds the next day's Asia. Every session hands its range forward to the next one. On the chart, each active session draws as a colored box that grows with the running high and low, then locks when the session closes. It keeps the last 5 of each type by default, and you can lower that if it crowds the chart. The box is the foundation everything else is built on, because the moment a session closes, its confirmed high and low become the entry levels for the next session in the cascade. Here's how a range becomes a trade. The tool takes that session's high and low and calculates two prices. The short level sits above the high by an amount you choose, called the offset. The long level sits below the low by the same kind of offset. These appear on the chart as dotted lines, labeled L for long and S for short. If the next session sweeps past the prior high or low and reverses, you want to be resting there for it. Set the offset to 0 and your entry sits right at the extreme. Increase it and price has to travel further past the level before you're filled, which thins out the small, meaningless pokes and waits for a more decisive sweep. You can switch off either direction for any session you only want to trade one way. One thing worth clearing up: the level itself is anchored to the previous session's range. Asia's high and low set London's levels, for example. But the offset and the risk to reward box you apply belong to the session you're actually trading. So when you want to trade London, you set London's offset and London's stop and target inside the London group, even though the line is drawn off Asia's range. Each session you trade is configured in its own settings. Then comes the part that makes it set and forget. Every level can draw a risk to reward box, and it draws before price gets there. There's a blue zone from the entry up to your take profit, and a pink zone from the entry down to your stop. The whole trade is laid out in advance, so you just rest a limit order at the level and set your stop and target to the edges of the box. By default, those distances come from fixed point values you set per session. But you can also switch the box to ATR auto-sizing, where the stop is taken from the average true range and the target is a multiple of it, so the box breathes with volatility instead of staying fixed. The second set and forget strategy is the opening range. The idea behind it is simple. When a market opens, the first burst of activity sets the tone for the session, and the high and low of that opening window often act as the boundaries price either breaks out of or rejects from. So instead of a full session, this marks the high and low of the first stretch after the open, 15 minutes by default, and trades the break of that range. It runs per session. You can enable an opening range on any of the 5 sessions, each with its own stop and target, and it uses that session's open time. London and NYAM are on by default, since that's where the breakout works best, but it's yours to configure. Each session's settings work as presets you can save and reuse, so once the backtester tells you what works for a given session, you lock it in and it's there every time. When the range completes at the end of that 15-minute window, the tool prints the same style of risk to reward box at each edge. Your stop and target distances come from one of 2 places: the fixed point values you set yourself per session, or automatic ATR sizing, where the tool measures recent volatility with the average true range and sets the stop and target from that. So the box adjusts itself to how much the market is currently moving instead of staying a fixed size. From there, you decide how to trade it. You've got long and short toggles to set which breakout directions it takes, and 2 optional filters to tighten things up. A ribbon trend filter only takes longs when the trend cloud is bullish and shorts when it's bearish, so you're trading with the trend, not against it. And a volume filter only takes a break when the breakout bar has enough volume behind it. Both are off by default. Turn them on if you want fewer, higher quality breaks. The simplest, most hands-off approach is to rest your stop or stop limit order right at the edge as soon as the box prints, so it fills right at the price breakout. If you'd rather not commit until you've seen the range actually go, you wait for the breakout first, then place your limit for the retest back to the edge. Price breaks the range, comes back to retest the level it broke, and fills your order there. Fewer false starts, but you can miss the moves that break and never look back. On a fixed target, you cap the trade where the box ends. On a trending day that leaves a lot on the table, so there's a second exit mode, the ribbon flip. It rides an EMA trend cloud. A fast and slow EMA, blue when bullish, pink when bearish, and instead of taking a fixed profit, the trade stays in until the cloud flips against it. A long closes when the cloud turns bearish, a short when it turns bullish, and the stop stays live the whole time, so you exit on the stop or the flip, whichever comes first. Fixed R to R for clean, defined trades, ribbon flip to trail a runner. This applies to the opening range only. The sessions always use their fixed boxes. And on top of either approach, there are the signals. The require retest toggle controls when the break signal fires. With it off, you get a signal on the raw break the moment a candle closes beyond the edge of the range. With it on, the signal waits for price to break and then close back at the edge, confirming the retest before it fires. These are just signals, so you can use them as a heads up to place a trade manually, drive an alert, or wire them up to a bot for automation. Here's how I trade it myself. New York AM is where most of the action is, but I also like London's open, so I run the opening range on both. I set the breakout alert, and when it fires, I place a limit order right on the high or low of the 15-minute range. This is where the ribbon earns its keep as a filter. Say price breaks up and the ribbon is bullish, blue. That's my cue to take the long, so I rest the limit and set my stop on the level the indicator already calculated, either from my backtested settings or from ATR. If the ribbon disagreed, I'd skip it. There's no right or wrong here, fixed or ATR, filtered or not. It depends on what you want from the setup. The options are there if you want them. That covers the mechanical core. Now the tools for traders who want to be more hands-on. If you'd rather read the chart and decide for yourself, this is your layer. Under key levels, you can overlay the previous day, week, and month highs and lows, the day, week, and month opens, and round numbers at any interval, all the structural prices that sweeps so often react to. Then there's dynamic support and resistance. It finds recent pivot highs and lows, and flips a level's color from resistance to support, or back again, when price closes through it. One thing to be clear on, this is display only. It doesn't fire signals and it doesn't change anything the other modules do. It's there to give you confluence, so when a session level lines up with a flipped support zone or the previous day's high, you can judge whether the setup is worth taking. There are also session high and low extensions, dotted lines that carry a closed session's range forward until that session opens again, so you can see where price sits relative to the range it's already swept. On top of that is VWAP, a single line you can anchor to the session, week, or month. Use it as a bias filter, longs above it, shorts below. And the EMA trend cloud sits here too. Even if you're not trading the ORB, read it on its own for quick trend context. Blue for bullish, pink for bearish. The indicator fires when a session starts, when a session closes and new levels are drawn, with the high and low in the message, and when price actually reaches a level. There are alerts for VWAP crosses, the VWAP reversion signals, and the opening range breaks too. The messages carry the ticker and the price, so one setup works across as many charts as you add it to, and you can route them to a webhook for automation. Now the part I really want you to take away from this, it's tempting to throw the indicator on your chart, eyeball some offsets, and start trading. Don't. The right order is backwards from that. You validate your settings in the backtester first, and only then carry them to the live indicator. The QSTS backtester runs the same logic on historical bars. The first thing to notice is the mode switch at the top, and there are three. Session Fakeout runs the session cascade. Opening range runs the breakout, and combined runs both edges together on one account as a single strategy. First fill wins, so if a session trade is already open, the opening range stands down, and if the breakout fills first, the overlapping session orders are canceled until you're flat. Session Fakeout and opening range are kept separate by default, so trades from one don't net against the other, and your statistics stay clean, while combined lets you test the two as one system to catch more of the day's opportunities across both edges. On that note, each session has its own enable toggle, so you can isolate a single session and read its stats on their own. The discretionary tools and VWAP aren't backtested here, by design, since they're judgment calls rather than a fixed rule set. In session fakeout mode, when a session closes, the backtester places actual limit orders at the calculated levels for the next session. If price reaches a level, it simulates the position, applies your stop and take profit, and logs the result in TradingView's built-in strategy tester. So you get real numbers: net profit, win rate, profit factor, and drawdown, for any combination of offset, stop, and target. There's one rule baked in. It takes one long and one short per session at most, and force closes anything still open at the end of each session cycle, win or lose. That keeps the results clean and stops overlapping trades from distorting the equity curve. Sizing works two ways. By default, the backtester sizes every trade from ATR, with the stop at 2 times the ATR and the target at 1.5 times the risk. You can switch to fixed point values instead and compare, run one, note the result, switch to the other, and see whether adaptive or fixed suits your instrument better. Opening range mode tests that break the same way, with the same filters and exit options, 1 trade per enabled session per day. So here's the whole sequence. Add the backtester to the exact chart and time frame you intend to trade, and leave it on session fakeout to start. Begin with offsets at 0 and the defaults, and read the strategy tester, net profit, win rate, and especially drawdown. Then go session by session, tuning each one's stop and target to fit that session's typical range on your instrument, and compare. When you've got a configuration you trust, copy those session times, offsets, and stop and target values straight into the Quantum STS indicator. From there, the indicator visualizes and alerts on the exact setup you validated, and you use it for live execution, watching the boxes to preview each setup and letting the alerts tell you when price arrives. A few notes before you run with this. Both tools ship-sized for the Micro E-mini NASDAQ contract, so if you trade anything else, review your point values first. The defaults are a starting point, not a finished strategy. A backtest tells you how a setting behaved in the past. It doesn't promise the future. Use it to understand how your settings behave, not to predict profit. And if you're on a funded or prop firm account, make sure your stop distances and sizing fit inside that account's drawdown limits before you risk anything. Quantum STS is part of the Quantum Pro Suite. The access link is in the description, and if you've got questions, come join us in the Discord.